Hello, it's me, Olga Vitkovskaya. You're watching a weekly equities market review presented to you by InstaTV News team. The last working day of the previous year was marked by a slight decline of the market. However, on the whole, the session was lax. The annual dynamics didn't show any sensations as well. S&P did not demonstrate any changes in 2011. Thus, despite the considerable volatility of the market during the last session of 2011, the main stock indices remained almost unchanged, as the worries about the European debt crisis leveled expectations of the American economic recovery in 2012. S&P closed the year at the level of 1,257.6, having lost 0.04 pips. To compare, the year 2010 resulted in the index reaching 1,257.64, and only Dow Jones managed to close on the positive side. It up moved by 5.5% and in 2011 closed at 12,217.56. High-tech Nasdaq declined by 1.8% to 2,605.15, and such results could hardly be called unexpected, as a strong reaction of traders to the U.S. rating downgrading and debt relief to Greece and the political uncertainty in South Europe did not indicate such outcome. Meanwhile, some changes were registered at the New York Stock Exchange. Thus, for the moment of the trading session close, in the bank sector, the shares of the Bank of America, which is the largest commercial bank in the USA, advanced by 1.83% and closed at $5.56 per share. The shares of the bank are under pressure of disappointing statistics for 2011. The papers of the Bank of America lost 58% annually, which is the worst result of all Dow components. Another so-called loser of 2011 is the aluminium concern Alcoa. In 2011, the shares of the company decreased by 44%. Moreover, as it is reported in the press release of the American Stock Exchange, NYSE stops trading AMR shares. That is the mother company of the American Airlines. Earlier, the AMR filed the insolvency report to a court. The carrier explained this decision by necessity to restructure the debt. Over the last 10 years, the losses of the AMR Corporation reached $12 billion. The losses of 2011 are forecast to amount to $1.1 billion. The assets of the AMR are assessed at $24.7 billion, and the debt of the company is $29.6 billion. The average close price of the AMR shares for a 30-day period did not exceed $1 per unit, and this contradicts the NYSE standards. After the news about bankruptcy, the shares of the company lost over 5% and decreased to 51 cents per unit. So now the shares of the AMR Corporation will be officially taken off the trades up to the 5th of January 2012. That was the weekly stock market analysis on InstaTV News channel. See you in a week. Goodbye.